Are you ready for what is coming on GBPJPY? I enjoin you to be ready because there will be a massive opportunity in this currency pair in no distant time, and only those who are ready can take advantage of it. So here in today's video, I'm going to show you the massive opportunity that is lurking around, waiting for those who are diligent or those who are informed to take advantage of it and make some money from the Forex market. So if you're new to the channel, this is Mobile Trading Academy, where we simplify Forex trading, helping traders make money trading just with their phones. And if you haven't started yet, this may be an opportunity for you to boost your confidence and make some money from the Forex market. So if you haven't subscribed to my channel, kindly hit that subscribe button, turn on your notifications so you don't miss out when I release my next videos. So without further ado, let's get into the business of the day. So here is GBPJPY 1 hour time frame. Here I'm trading from my phone and I'm teaching you how to trade with your phone. So here was the channel that I was tracking initially. So price was moving from the bottom of the channel to the top of the channel. So the bottom, remember, I always tell us that the market loves symmetry. And when you understand that, you will know that you can always track the movement of the price from one end of a channel to another end of a channel. And once you get that idea, you will always know how to follow the market when it moves. So here we saw it from the bottom of the channel to the top of the channel, back to the bottom, then to the top, fulfilling that symmetrical movement of price within a pattern. Then we saw the price also move down again to the bottom of the channel, broke below the bottom of the channel, but found support right here because of the previous price level here. Okay, you see price respects levels. So here price respected this level when it got to this point. That is what I teach in my support and resistance course. So if you're interested in getting that course, I will really enjoin you to just say I'm interested in the comment section and I'll make that course available to you. All right. So price respected that level when it came down here, then bounced off and reclaimed the bottom of this channel. But we saw another dip below this level, and that is what the market does very well, to give us a fake out. And you know why? When the price created this low here, it was equal to this one, so there was liquidity. Early buyers started buying, putting their stop losses below these two levels, this level and this level, because they've seen that price respected it here and it was an equal lows. So as a result, they placed their stop loss just below it. So the market always seek liquidity, and the liquidities are always below lows and above highs. So these equal lows here, this low and this low, created that liquidity. That was why the market sought out those liquidity, that is the stop losses of those that were buying. The market sought them and cleared them here. That is how the market makers fill in their orders. So when they took out the stops of the people here, we saw the market reclaim the level again, and a reclaim of this level and also a reclaim of this channel bottom meant that this was a fake out. This was a downside fake out, and that also tells us that price was going to head to the top of this channel, because a fake out in one direction will lead to an extended move to the opposite direction. So price was supposed to head towards the top of this channel, but the market closed right here last Friday. We saw the market open on Monday yesterday with this massive gap to the upside. So this gap up creates an imbalance over here. So there is a massive imbalance here, and the market has since continued up to the upside. So the opportunity right now is not in the long side. That is not to look for long opportunities, rather is to look for short opportunities, because the market abhors vacuum. Just like nature abhors vacuum, markets abhors vacuum. This imbalance has to be filled. And for this imbalance to be filled, there must be a failure of a critical level on the upside that will send price back down. And that is what I want to show you, how to identify the level that you should begin to look for short opportunities to fill up this imbalance right here. All right. So when we expand our charts, we see that the critical level we have right now is this level, and then this level, but we also have a minor level right over here and right here. These are the levels of interest to us right now. This level is number one, where price came up here and we saw a rejection that sent the price down here until we saw another rejection that took the price up. So this is the major area to look at, 202.22. Once price closes below this 202.22, that means that we have an upside fake out right here, and that will lead price down to close below this level and then to begin to seek the imbalance here. Then another minor level that is of interest to us is just the top of this very candle here. So you can also mark it if you wish. So I can always mark it out. All right. So I'm taking the top of this previous doji here, this doji, and then shooting star that we have here. So this is another level, 202.69. Though this is a minor level, however, it is important. If price remains above it, then we may see some upside move. But if price on the 1 hour and 4 hours candles begin to close below it, then we may see the price get to this point. So if we begin to see price close below it, that may be a signal for early sellers to begin to short and put their stop loss just above this, because price closing below this level makes this move a fake out, an upside fake out. And if you get an upside fake out, that means we'll have an extended move to the downside, which will be this level. So, and this is the critical level that we must see price either break below or move back up. But we are not looking for buy opportunities around here. We are only looking for a break below this because of the imbalance that we have right here. So all you need to do is wait for price to close below this level and then take a short position with your stop loss above this previous high. However, the major trade we're waiting for is to see price close back below this level. So a close back below 202.22 or 20 area will give us an upside fake out, to make all this move an upside fake out. And you know that a fake out in one direction will lead to an extended move to the opposite direction. So that will give us an upside fake out that will lead price down to this level, then back to this level, then back to fill up the imbalance that we have right here. And that could also take price even further down to the bottom of this channel we talked about. So that exactly is what I'm expecting from this currency pair. And this is the one good thing about trading support and resistance, learning how to identify your key levels and learning how to trade them. In my support and resistance mastery course, I explained how to find these key levels, how to trade them, because there are 3 strategies to use once you identify your support and resistance. And in that course, I teach you how to identify your key levels, the strong supports and the strong resistances, and the actions you can take around them. So if you're interested in the course, just comment "I'm interested" and we'll take it up from there. Thank you for watching. Ensure you subscribe to the channel, turn on your notifications so you don't miss out when I release my next video.